Does investing in gold and cryptocurrency protect us from inflation? This is not Oz Crypto Boy TV, this is not a channel like that. Cryptocurrency is interesting as well. The technology is amazing. If you read the technology, they are seriously very smart computer science people behind it. However, when it is introduced and it start giving out of the moon return like 10x in a matter of 1 year, people start gambling their money in cryptocurrency, unfortunately. And that speculative behavior also happens in gold asset. And interestingly, I'm going to show you this clip by Jack Bogle. I think the interviewer just interviewed him shortly after dot-com bubble or great financial crisis. Is one of those crash. And he asked Jack Bogle about his opinion with gold. And Jack Bogle said,
how would you advise investors looking at commodities right now? I mean, there's been such a rush into gold, especially lately, but really over the past few years. Is gold at these levels a wise investment for an average investor?
Well, I think no. And the reason I say no is gold is not an investment at all. Gold, to go back to where we started, Poppy, is a speculation. It has absolutely no underlying intrinsic value. Bonds are ultimately supported by interest coupons. Stocks are supported by dividend yields and earnings growth. And gold is supported by, well, the ability to think somebody else is going to take it off your hands for more than you paid for it. It doesn't have an internal rate of return. So it's a speculation.
Jack Bogle has a strong view about gold, that it's not an investment at all. Another bold statement came from a guy who almost 100 years old, Charlie Munger. The vice chairman of Berkshire Hathaway said that Bitcoin does three things. Bitcoin is stupid, evil, and embarrassing. It's evil because it's showing lack of support to the centralized government that we have right now, which at the moment we desperately need the US dollar to remain the strong reserve currency in the world. And it's embarrassing because, yes, there are a lot of social media influencers showing they are a crypto millionaire, crypto billionaire. Or they say that, that every minute there are crypto millionaire being born. Well, that sounds like an amazing statistics. But what if we really have the real data? And I am pretty sure that the crypto losers outweighs. There's way more crypto losers or even people gone bankrupt by investing in crypto as opposed to the crypto millionaire and crypto billionaire. And the person in the middle, the crypto exchanges, reaps a pretty decent profit, such as Coinbase. And if you follow Rich Dad Poor Dad, you've read the book. I've read the book, and it's pretty interesting to see the diagram of the business owner and the specialized professionals and the worker and investor and an understanding an asset and liabilities. But there are some things that Robert Kiyosaki is very firm of that he always said that cash is trash, in particular US dollars to him. And he loves silver. He loves investing in gold. He loves cryptocurrency as well. But will gold and crypto protect us from inflation? Because we don't have enough data with cryptocurrency, but I want to show you about the mania and speculative behavior that is happening in the gold asset. Doesn't mean that it will happen in the future for gold. I'm not showing you projections. I'm just showing you what has already happened in the history. And also, I'm not giving you projection for any crypto. This is not Oz Crypto Boy TV. This is not a channel like that. This is just giving you a history, and it's not a good indicator of the future. But this is the chart of the price of gold per troy ounce from 1970s, about 50 years ago, to 2022. Back in 1970s, the gold price per troy ounce is about $35. And after 50 years, it has gone up to what we currently have in May 2022, about 1800s per troy ounce. And that is about 52x. And if you analyze the return, and if you hold that gold bar for 50 years, annualized return is about 8.2% per year for that 50 years. That sounds like not a bad deal. If you bought it in 1980, you see what happened there? From the 70s, it was 35. And in 1980, in 10 years, it has gone up by a factor of 20. So 20x. To about $600 or $700 per troy ounce, your 40-year return from 1980 to 2020 is about 3x, which is not really great because if you analyze that return over 40 years, that's only about 2.8%. And what if you have inflation assumption about 1.5%? That means you're only beating the inflation by about 1% for that 40 years period. Skip forward to 1990s, the price of gold actually gone down since the 80s to about $400. Maybe people are more interested in buying stocks, or maybe the interest rate really changed. It's better to buy bonds. I don't know. Potentially, maybe. But I remember in the 90s, it's better. You're better off to buy bonds in the bank, and your return from $400 to $1,800 in about 30 years. That's not 3x. That's about 4 point something x, but the annual return is pretty accurate. It's about 5% per year for that 30 years. Is that good or is that bad? Well, if you compare with the bond that can give you a coupon of 10% in the 90s, gold is not that appealing. So it sounds like the interest rate is like the gravity after all. And it comes down to my last point on gold and cryptocurrency. I've seen in ABC News or 9 News that the pensioners or people that is almost reaching their pension age are getting worried and pressured to get more return from the investment because they know their retirement fund is not enough to get a comfortable retirement, and they start considering cryptocurrency. Very wild, unregulated asset that even right to this day, even the fund manager in superannuation, in their high growth strategic asset allocation, they don't consider gold and cryptocurrency at all. This is an example from Australian Super, the largest superannuation provider in Australia. So what do you think? Does gold and cryptocurrency protect us from inflation? That Jack Bogle is very bold about this, that gold may not be an investment at all.